Hey everyone! Hey guys, welcome back to the channel. I hope you are all doing great. If you are even slightly active in the stock market and keep an eye on aerospace, space technology, or high-growth stocks, then you probably know exactly how much buzz Redwire Corporation, better known by its ticker, RDW stock, has been generating lately. But guys, today, a major piece of news emerged straight from the corporate corridors that has left investors, analysts, and major fund managers completely stunned. And this surprise isn't out of panic. It's pure excitement. Redwire Corporation has just announced a massive amendment to its financing arrangements. This single move is so significant that it is going to completely reshape the company's financial health and fundamentally transform its balance sheet. If you are already an investor in this stock, or if you are planning to put your hard-earned money into it in the coming days, I urge you to pause for a moment and listen very closely to today's discussion. Today, we aren't going to talk about vague rumors or hype. Instead, we are going to dive deep into the official financial numbers, analyze the company's debt structure, and break down every single layer of their brand new deal with global banking giant JPMorgan Chase. You don't need to watch the screen for this. Just put your headphones on, sit back, relax, and understand the narrative that is going to drive the price action of RDW stock over the coming days and weeks. So, without wasting any time, let's dive straight into today's crucial analysis. Let's first address exactly what happened and where this entire story begins. You see, for any rapidly growing company operating in capital-heavy sectors like space exploration, satellite manufacturing, and defense technology, two things matter above everything else. The first is liquidity, meaning how much ready cash the company has access to at any given moment to deploy into new projects. The second is debt, meaning the total burden of loans hanging over the company's head. The higher the debt, the more interest they have to pay back to the banks, which ultimately eats away at their net profits. So what did Redwire Corporation do? They played an absolute masterstroke on both of these fronts. The management sat down with JPMorgan Chase Bank, one of the largest and most powerful financial institutions in the world, to renegotiate their existing agreements. From these intense negotiations, two massive corporate decisions have emerged, sending a massive wave of optimism through the market. The first major decision resulting from this new agreement is a solid, aggressive increase in the company's revolving credit facility. For those who might not be familiar with how a revolving credit facility works, let me break it down in very simple terms. Think of it exactly like a high-limit corporate credit card. It gives a company an immediate pool of funds that they can draw from whenever they need urgent cash to run day-to-day operations, build new manufacturing facilities, or seize unexpected project opportunities. The best part? They don't pay interest on the full limit like a traditional loan. They only pay interest on the exact amount they actually withdraw and use. Previously, Redwire's limit under this facility was capped at $30 million. However, following this new amendment, JPMorgan Chase analyzed Redwire's stellar operational performance and solid business model, gained massive confidence in them, and bumped that limit straight up to $50 million. Yes, you heard that right. A direct $20 million increase in their credit line. Now, just think about this logically. When an aerospace company suddenly has an extra $20 million cash cushion waiting in the wings, what happens to their operational confidence? The single biggest advantage here is execution capability. If NASA, the US military, or any international government awards Redwire a massive multi-million-dollar contract tomorrow, as they frequently do, the management won't have to scramble or stress about where the upfront capital to start production will come from. They have JPMorgan standing right behind them, ready to provide cash for strategic and operational needs at a moment's notice. This massively elevates the company's credibility on the global stage. But guys, the most surprising and arguably the best part of this entire announcement isn't just the increased credit line. It is what the company did with their existing debt. They didn't just expand their access to future cash, they aggressively slashed their current liabilities. Redwire took a massive chunk of change and made a spectacular $40 million advance payment, prepayment, toward their outstanding term loans. Let's take a moment to look at the deeper psychology of this corporate move. In the small-cap corporate world, whenever a growing tech company generates extra cash flow, the management often tends to blow it on unnecessary overhead expenses or reckless acquisitions. But here, Redwire's management is demonstrating incredible financial discipline and maturity. They consciously decided that before expanding blindly, they needed to clear the debt hanging over their heads. Following this massive $40 million prepayment, their total outstanding term loan debt has been wiped down to just $50 million. They essentially cut their long-term loan obligations nearly in half. This is a phenomenal amount of capital for a company of this size to deploy toward debt reduction. It serves as definitive proof to the entire market that Redwire's core operations are generating highly resilient, organic cash flow, and that the underlying business is fundamentally strengthening from within. Now we arrive at the ultimate question that every retail and institutional investor sitting at home is asking. How does this benefit me? And what is the direct impact going to be on the RDW share price? Let's break this down through a strict financial lens. When a company aggressively pays down its debt, the most immediate, guaranteed impact is a dramatic reduction in their interest expenses, the ongoing interest fees they have to pay out to banks every single quarter. Right now, global interest rates are sitting at historically high levels, and carrying large variable debt in this macroeconomic environment is incredibly expensive. By wiping out $40 million of their loan balance, Redwire has permanently freed up a massive amount of capital that used to be wasted on interest payments. And guys, when interest expenses go down, where does that saved money go? It drops straight down to the company's net profit margin, their bottom line. This means that in the upcoming quarters, when Redwire files its official earnings reports, their net profitability metrics are highly likely to look significantly stronger and cleaner than Wall Street originally anticipated. Furthermore, this move drastically de-risks the company's financial risk profile. Heavyweight institutional investors, like hedge funds and pension funds, are traditionally terrified of investing in small-cap growth companies that carry high leverage, because if the economy hits a recession, highly indebted companies are always the first to collapse. But now, with Redwire's balance sheet looking incredibly clean, de-risked, and optimized, major institutional buyers are going to view this stock under a completely different light. They see a highly responsible management team and a safe haven for institutional capital. Guys, when you look at the big picture and extract the core essence of this news, it paints a very clear narrative. This is the story of a company that isn't just conquering the space technology sector operationally, but is also setting up a financial fortress to become a long-term economic powerhouse. On one hand, they secured a massive liquidity boost through JPMorgan to seamlessly execute future multi-million-dollar contracts. And on the other hand, they voluntarily chopped their debt nearly in half to eliminate financial risk. Both of these indicators are incredibly bullish. Ultra-positive signals for both the short-term momentum and the long-term horizon of RDW stock. Now, I want to turn the floor over to you, the listeners, who are tuning into this analysis right now. Do you currently hold shares of Redwire Corporation in your portfolio? And after witnessing this massive balance sheet restructuring, do you believe RDW stock is gearing up to shatter its previous all-time highs and embark on a historic breakout? Whatever your thoughts or questions may be, drop them down in the comment section below. I personally read through your comments and love interacting with you guys. If you found value in today's deep dive audio analysis and learned something new about corporate finance, please give this video a quick thumbs up. Your single like helps support the channel's reach tremendously. And if you want to stay ahead of the curve with daily, in-depth stock market news, deep dives, and critical financial updates, make sure to hit that subscribe button and turn on the bell notification so you never miss an urgent update. This is not financial advice.